Good afternoon, I'm Bridget Taylor and this is Currency Wars. Today I'm joined by Andre Ehrenstein, he's from RMB. But first we're going to have a look and see what's happening in the markets. The FOMC has finally got its hour in the sun and all eyes are going to be firmly on Miss Yellen this evening, 8:30 p.m. local time. But let's have a quick look at the arguments for and against the first rate hike in almost a decade from the Fed. Some of the arguments for the rate hike include the fact that inflation is rising, currently sitting at around 1.83%. And the recent 5% recovery in the oil price poses an upside risk to this inflation figure in the US. Meanwhile, employment levels are back at acceptable levels around the 5%, and this has been well publicized as this was the Fed target. Also, economic indicators in the US point to the recovery of an economy that was in a benign state. And some of the arguments against the hike highlight that the inflation rate is not yet at 2%, or that it is not above 2%, and that there's been well-publicized targets around this increase in terms of the potential for this rate hike. The unemployment number may have improved, but real wage growth is not evident. And then lastly, the Chinese slowdown. This poses massive risk to the contagion in the US. So all in all, the Fed has a good argument to make whichever decision they decide to take. And this has been split as much as 50-50%. We will have a decision and the consequences will be discussed on this show either which way. However, what does highlight is that we are firmly closing the door on more quantitative easing. And this sees a huge wall of cash that has been evident post the financial crisis diminishing. This continues to put emerging markets under pressure through currency devaluation. This may well boost rebalancing within weaker states, but we're not out of the woods yet. Meanwhile, the South African rand has recovered this week. It's traded back below 13.30 and targeting 13.20 as the technical support. That could open up 12.80 if in fact the Fed decides to remain on hold. However, a hike decision will undoubtedly see the rand weaker. And we're going to be discussing that further this afternoon with Andre Ehrenstein. Right, now that we know where we stand, let's have a look. We're going to focus on the FOMC today because I think if you look at all the wires, Andre, and we've been waiting for this decision, a lot of talk, yes, no, should they, shouldn't they, will they remain on hold? Give us an overview in terms of what you're seeing from a bank perspective, the type of uncertainty, the type of illiquidity. Is that evident? We've seen the VIX pick up, so the volatility levels. All of this, one, because of the Chinese issue, but mostly because we're now waiting for this final FOMC decision.
Well, yeah, I think there's been massive build-up to this decision, and the Fed have painted them, put themselves in a very difficult corner. Yeah, I think it's a 50-50 call today on whether they do it or whether they hike or not. But I think on balance, I think the key is going to be what she says.
Yeah, sure.
I think if they hike by 25 basis points and she's very dovish, in my view, I think that's probably the best outcome for emerging markets. I think the uncertainty around whether you hike or not will be gone. Yeah. There'll be clarity in terms of whether there's going to be further hikes, when there's going to be further hikes. And I think that's going to calm everybody down. Yeah. And I think that would then help emerging markets. So it almost, you'll have potentially an initial sell-off, but I think emerging market assets will rally fairly strong going into year end.
If she's dovish, though, this is the big question, because a lot of the commentary talks about the rate of the increases that we can expect, so the curve in terms of how aggressive those hikes will be going forward. And then obviously around that commentary, because it will be interesting to see what she says with regards to their outlook at inflation. How this, if in fact they mention China, for me that's going to be quite a key indicator as to the severity of their concerns around the Chinese slowdown and what the impacts on the US economy will be. There's been a lot of noise in the system around China, but will the Fed see that as something that is detrimental to their growth going forward?
Yeah. It's going to be a tricky one. I think if they mention China specifically, I think that will introduce a lot more risk. I think the focus should be on global growth, not close the door, open the door to certain things, not raise the risks of uncertainty. And I think that's really what the Fed will manage to do, particularly if they do raise rates. That rate rise will filter through into the inflation forecasts, into their dot forecasts, and that's going to give them a lot of flexibility around giving their projections in terms of future hikes.
Yeah.
I think if they do hike and the dot forecasts actually show growth to be a lot more, future growth to be a lot more benign, inflation to be lower, the need for those aggressive rate hikes into 2018 is it's going to wear away. So I think that's essentially, as I said, I think that's the best outcome for us as an emerging market.
Look, I think one of the things that we can also focus on is this is the first time since we saw the financial crisis hit that we're starting to see a big developed nation take a more tightening stance. We've seen quantitative easing, we've seen cash in the system, we've seen all-time low interest rates. So this is quite a big message that has been sent. One, we've pulled back quantitative easing. That will no longer be taking place. We've been draining the system slowly, but now we're going into a hiking cycle. Are we ready? Is the market ready for this?
Well, don't forget, I think a lot of the people that are trading interest rates these days have never seen a rate hike.
Yeah.
So, particularly in the US. So, how the market plays out is going to be quite tricky. I think liquidity is going to remain a problem, and that's not only whether there's Fed issues, but there's regulatory issues around.
But then that
liquidity.
concerns me because that exacerbates these moves.
Correct.
So in the past, if you've got a lot of liquidity in the system, you have a lot more smooth type of market reactions. When we see what's happened on the VIX index, that gives you a very good indicator that people are nervous, they're unsure, and yes, as you say, a lot of the guys that are trading these days haven't even seen the likes of interest rate hikes, where a lot of us that are older in the market will only remember interest rate hikes. So it's a completely different movie that we're moving back into now, and these liquidity levels, as you mentioned, with the regulatory environment, are something of a massive concern. So these knee-jerk reactions that we see, I mean, if we see the big moves that we've seen in the rand, do you think this is the kind of environment that we can expect for the foreseeable future?
Definitely. I think liquidity will remain a problem. The one thing that's going to be key out of the Fed decision is that they will remain and have been. We are data dependent, so good data, bad data, good data, bad data. So
but then those moves mean that you're seeing that knee jerk all the time.
Yeah, and I think that means volatility is here to stay and will probably increase over time.
So for investors, I mean, if you're looking at this as an investor, I mean, most people that have been in the markets for a long time, you're kind of used to this kind of volatility. I think one of the things we maybe need to make clear to the viewers is that because of those moves, we've got to be a lot more pliable in terms of not getting knocked out on the top and the bottoms all the time. Have a view, stick to that view, and don't get taken aside by all the noise, because the noise throws you out all the time and you lose sight of it.
Well, I think what's key is that you've got to have sound risk management.
Yeah.
You've got to then pick your levels. So as a company, you've got to say, right, where are we pitching dollar rand? Where have we budgeted? Where are we now? Trade.
Because
and
that's
I think that's really, and trying to pick tops and bottoms in a volatile market is exceptionally difficult.
And it's also not your business. I mean, if I look at a lot of corporate clients, the problem is that when we went into this at the beginning of the year, your budget forecasts were looking at worst case scenario, paying, I don't know, buying in your dollars with your forward points, maybe paying 11.50, 11.80. Most of that's already been covered for the remainder of this year. You've made R2 on that already this year. But trying to pick these tops and bottoms when you're sitting at the 13.50 level is a whole different ball game, and you start to play in an environment that you don't really want to be involved in. You rather want to take that call, make a decision on your budget, wherever that is trading, and like you say, with prudent risk management, hedge yourself effectively, because the upward trend does remain.
Yeah, I think when you look at importers have a lot more difficult. They have a lot more difficulty in terms of hedging, and yes, I think it's quite difficult from their perspective to kind of look at those, say dollar rand's trading at 12. Why, and I have to I'll fix it for a year at 12.50.
Yeah. It hurts.
That cost of carry is quite a bitter pill to swallow. But look where we are now.
Exactly. You're now doing it at 14. Right.
So again, sound economic and hedging principles apply, and that's what you do, whether you're an importer or an exporter, and that's how you manage your business.
Okay, I'm going to put you on the block shortly just to give us some view for the week ahead. I know it's tough, so maybe look at an either-or scenario. If we see a Fed rate hike, what we can expect in the week ahead, and if we don't, what your view is. We're going to put Andrew on the block, so stick with us. Right, let's have a look. What do we think is the outcome? It is 50-50, so I'm not going to... You can maybe give us your opinion in terms of what you think the outcome will be. However, just let our viewers know that if this is the outcome, this is what your view is around the currency moves.
Okay. I think if there's a rate hike, we will see dollar rand probably trading close to 13.50, 13.60, but then I think those are good selling opportunities.
Okay.
I think if there's no rate hike, we will see a dip down to 12.80 at 12.90. Around those areas, you buy.
Dip buying opportunities, okay.
I think our fundamentals are still very weak.
Yeah.
And that's, so the remaining view is that I think you buy dips and the dollar strength is going to continue for the next 2 or 3 years.
We might just have that initial knee-jerk reaction.
Correct.
Thank you so much, Andre. I appreciate that. So just in a nutshell, look out for this evening, 8:30. You've got to watch what Janet Yellen says. But overall, we are not sure what the outcome is going to be. Either which way, it is going to be an interesting ride. So if we see a rate hike, we probably see Rand weaken slightly on the back of that. A lot of it's already been priced in. However, if we do see her remain on hold, we might in fact have better levels to buy some dollars down to potentially below the 13, down to around 12.80. But those are dip buying opportunities. Andre still thinks that the Rand remains weak and the trajectory remains in place for a weaker Rand. However, that's all for today. You're welcome to send us any of your questions or comments to either at Currency Wars 410 or to myself at Bridget R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.
Hi.
Yes, I can. Good afternoon. Sure. Please count to 5.
Count to 5. 1, 2, 3, 4, 5.
How is that?